What's up, everybody? Doing a market recap video. It's a late one. It's a really late one, so ideally you get a chance to watch this. Generally, Wednesdays is my no video day. Of course, I did a little video in the room today, and now I'm doing a recap video. It would have been out a little bit earlier, but my son had baseball, and I had some training tonight. Met a nice gentleman from Miami tonight, and now I'm doing the video, so it's 10:30 by the time this is uploaded, maybe a little bit after 11. Ideally, you get an opportunity to watch it. Here's what I'm going to do. I'm going to break down my thoughts from the chat room today. So let's go through my thoughts that I shared in the chat room today, because I really want to focus on this. And let's get this out of the way here so that people are not seeing. So here's my thoughts this morning. So good morning, team. Same message. Strong market. Participate. Let your trades mature, but note and understand where your high or low is, considering the NAS has been green for 8 straight days. Any form of consolidation on SPX, and I'm watching the ADMA on the daily. Currently watching ADMA on NAS, 8-hour chart. Let's have a great day. Obviously, it was a good day for some people, not a great day for everybody. So the idea is to really understand the perspective of where we are in the chart and where we are in the cycle. 8 straight green days in the NAS. We know potentially there's going to be that day, and I'm going to go through the chart, but I'm going to talk about some other thoughts I had here as we started to see some pressure. I'm just trying to see where my next comment is as we go through. Okay, here's my next comment. Watching the big lower wick on SPX NAS, we held the low. We business as usual. If we lose that low wick, we look for consolidation day. It looks like I meant to say if we hold the low, it's business as usual. And if we lose that low wick, we're looking at a consolidation day. As we know, we lost that wick and we went for a consolidation day. Now, what happened here was, I'm looking for my next message here. Moving on. So market and consolidation here. Okay, 15-minute ADMA on watch, and we went up and we rejected that 15-minute ADMA and we made a new low. So all tickers reacted to the market fear there. When the market bases and trades in balance, which we ended up doing for a very small period of time, tickers will resume their course. And we saw this. So this is at 10:30. We saw some names starting to go back up and actually making new higher days. Now, let me see what else here. I'm going through this to really help everyone understand where my psychology was, and then we're going to reflect it on the chart. NAS needed a consolidation day after 8 green days, so we came into the day prepared. No other day did I come in and saying, you know, how many green days we had. It was 8 green days. It's something very notable. We had the SPX bearish bat formation, which I did not talk about in last night's video because it looked like we negated it. Boom, it's the day later, right? We're just looking for no raised volume and 8 EMA on the daily to hold. Well, we did get raised volume. And I'm going to double check. I don't think the 8 EMA helped. Okay, so here we go. While market goes through consolidation, good time to remind yourself of the trader you want to be and how you want to manage consolidation days. This is your biggest challenge, and this is what we're going to talk about in today's video. Reminder, where your sticky note is, says your high or low is, in fact, you are consolidating today. Oh, okay, let me reread. Reminder where your sticky note is. Reminder what your sticky note says your high or low is. Okay, so where were you going to place, hey, I get to these levels, I'm going to get out of the trade if I hit these levels. Where was it? Always remember you can find another day to trade. This is at 12:30, man. Things got a little bit worse in the afternoon. Okay, note reversal hammers across all name. Everyone reacting same way. Ideally, potentially NAS hit its target. That was the golden pocket. It didn't. We actually made a new low. And here, this is the final message I'm going to share. And then I did that video a little bit later, which I think I might even post that video. The biggest mistake a trader makes is trying to catch the falling knife because they didn't respect their high or low. So it's all about the predetermination, your pre-game plan that you came into the day with. Were you ready to protect that high or low that you had set for yourself? Because the moment you don't, what do? You try and catch the falling knife. Better to be cautious and patient versus try to do too much. Let the charts develop here. Here's what happens. Most people don't let the charts develop. Because why? Because they didn't respect the high or low. So listen, everything I say, everything I talk about is not a lecture. It's a repetition. It's repetition because it takes the repetition to really understand when it comes into play. So when we talk about raising the higher low and the sticky note, and I know some people laughed at that, I know some people took it really serious, and it's a serious message, because what's going to happen is we will consolidate. Our accounts will consolidate when the market consolidates, because, you know, I saw a message from somebody that said, you know, I look for the day where people say what day it is on the Big Bear Day. I don't. I personally don't, because that means you're trading every direction of every single day. The idea for a trader is to play with the trend. Trying to day trade, overtrade, try and play every candlestick, you will burn out. You will lose. Ultimately, you're going to miss every trend. You're going to be too concerned about every movement in the market you're playing, the stock that you're playing, that you never actually catch the move. Because you're always focused on, okay, it's red, go red. Okay, it's green, go green. And you miss the overall bigger picture. This is my opinion, and this is how I teach, and this is my belief, that in order to be a long-term sustainable trader, grow your account exponentially, is to play the trends. Eventually, the trend ends. When the trend ends, what do you think happens? You're playing with the trend. You're letting that momentum ride. You're letting it go up. The day it ends, you think you're not making a higher low? Of course you're making a higher low. You were riding that thing the whole time. It takes confirmation that the trend is over. And when that confirmation happens, guess what? You got a higher low in your account. It's so simple. If you have the psychology to understand that you are prepared, hey, I'm up 100,000. I've made huge amount of money here. Eventually this is going to end. Not every day is going to be a payday. It can't be. Once that happens, once that turns, I have to respect where my higher low is. The biggest mistake traders make is when they don't respect the higher low. Why? Because then they deal with the regret. When they have the regret, then the fear comes in. When the fear comes in, analysis paralysis, you miss the next trade, opportunity cost, trades go without you because you didn't protect your account to begin with. It's a domino effect. You make 100,000, you said your higher low is going to be at 90, you hit 90, you see the market sell off even more, and you hit 90, you feel good about hitting the 90 because you're like, damn, if I didn't sell, I'd be at 60 right now, I'd be at 50. So now when you're at 90, you acted like a professional because you respected your game plan. The next opportunity that comes available to you that you believe is an A+ setup and you like the risk to reward, you take the trade. And it's easier to get back to 100 from 90. If your higher low is close to your top, it's easier to get that breakout. Guess what happens when you get a breakout? When you get a higher high? How do you feel? How does your emotion feel? Your account's at all-time highs. You feel great. That's the idea, to continue to have that great positive energy feeling in your trading. If you come into the trading day and you're like, I can't lose any more money, I'm nervous. Guess what? You're already behind. You're already in a negative state. You cannot beat the market in that state. You protect your higher low so that you can go and get the higher high. Let's talk about that a little bit more. When you don't protect the higher low and you drop to 60, you're thinking, man, the road to 100 now, I screwed this up. What do you do when you screw up? You make terrible mistakes because your psychology is all out of whack. You're dealing with so many negative emotions that you screwed it up again. And now you're scared. Or you force. And what happens when you force? You know it. You've done it. You blow up. And it's over. And then you can't make it in this business. I'm trying to teach people to be a professional trader. That's it. And if you can't deal with the consolidation day, you can't deal with the red day in your account in the higher low, then that's it. You're always trying to sell tops and you're always trying to buy bottoms. And in this business, it doesn't work that way. You can't predict the market to the penny. You need confirmation of reversals. Listen, when you make that higher low in your account, and I know Jay tagged me in a thread talking about where the higher low is in your account. And I actually should have taken some screenshots of my account in terms of the chart. The amount of the higher low, you have to think about it from your own personal perspective. Somebody might have a psychological number It's the actual dollar value. So it might be, listen, I got up to 110,000. I can't drop under 100 anymore, right? I can't drop under 100,000 because that number, that six-figure number, I just finally hit it. I have to respect that level. That might be the number. It might be a percentage point for somebody. Somebody might say, listen, I've gone on a 50% run in my account here. I'm willing to give back 10 to 15% of that move. That might be it. It's different for everybody. We all have a different mindset of what the higher low is in our account. I think about it as fibs. You run a fib, you look for a retracement to 0.236. That's the best level. That's the bull flag. That's what you want. The closer you are to the 0.236 on your higher low, the easier it is to go for the breakout. 0.382, that's the limit. You should not fall below the 0.382. That's giving back way too much. 50% of your gains down at the 0.5. Now you're wasting the move. So it's different for everybody. But here's the challenge when you find that higher low. Okay, here's the challenge. Because here's the higher low. You had a breakout in your account. Let's do it like this, right? You had a breakout in your account, and this was your previous all-time high. You broke to a new all-time high, and now the idea is you don't want this to fall back to here because you just broke out from that zone. To come back and revisit that zone, this is not a chart pattern. You don't want your account to be a chart pattern. You don't want your account to come back and retest your breakout. You just gave back the entire gains of your breakout. You want it to be in this range, right? So that, yeah, you broke out, you got a new all-time high, you gave some back. Why? Because the market consolidated. That's the nature of the beast. Natural. We already talked about this. So in this case, this is the most important now time in the chart, in your personal trading account chart. Because this trade in here has the opportunity to go for the breakout or to go for the breakdown. This is where the psychology messes everybody up. Tesla, Apple, those two stocks. This is where the main focus right now. Palantir, there's some other ones right now. Some people killed it. But you look at those stocks, and I'm going to use Tesla and Apple for example, and you think, okay, I got stopped out. I hit all my stops. I've hit the higher low. Some people didn't hit the higher low, right? They're still above the higher low, which is great. But you're in that zone now, and you're like, I want to buy. I want to buy back in because I'm worried it's going to go back up. So what you do is you start irrationally buying things today when it's 5-minute oversold, 15-minute oversold, 30 minutes oversold because it's oversold. So you immediately want to get back in. So you stopped, but now you're like, you want to get back in, and then what happens? You drop, right? You didn't allow the chart to develop. You didn't take an A+ setup. You just went right back to the wheelhouse. You went right back to the name that just made you that money. But what you failed to realize is that the reason why you made money in that stock was because the buying momentum was pushing the stock up, and you participated with it. You did a great thing. You played with the trend. You caught a nice move in the market, and you followed it, and you killed it. Now, the trend reverses. We're seeing bearish flow coming into the stock. Why are you still trying to play it the same way? Reminder, you made money because it went up, and you played it to go up. Now, the momentum is going down. Why are you still playing for it to go up? You have to wait. You have to wait. You have to ensure that when you take this higher low, when you make that give back, you take a pause. You relax. Take a breather. The next trade's coming. I promise you, the next trade is coming. They always come. There's always something. And it's going to be a great trade. You want to be near the higher low. You do not need to force those trades today. Once you force those trades today, you spiral, you spiral, you spiral. And at the end of the day, you look at it and you say, what the hell was I doing? I was buying all this stuff counter trend. I made the money with the trend. Why did I go counter trend? This is why I repeat these things. This is why I send those messages, because I've done all this stuff. I've done it. I've done it. I've done it so many times and sat there at the end of the day. I have my therapy chair over there in the back. Go sit there and be like, what the hell did you do? What were you thinking? Because your emotional state is not thinking clearly. And when your emotional state is not thinking clearly, you make big mistakes. Come into the day with your game plan. Where's your higher low? Charts breaking down. Risk off. Be patient. I promise you, there's more trades. You don't need to, hold on to say, I held through this, right? And just, hey, look, I held through it. It was just a shakeout. Don't, like that. Come on. The idea is not to be the coolest guy at the bar, right? The idea is to be a professional, to understand that this is going to happen, and how you react in those moments is what's going to differentiate you from every other trader that's out there. That's the nature of the business. Bears are celebrating today. Great. You had a day. That's nice. Enjoy it. Hope you caught it. Enjoy it. We will have another day. The bull team will have another day. We will have another trend. There's money to be made for everybody. Bears had the day today. Maybe they'll have a day 2 tomorrow. We will find another bull trend. I'm not bearish here. There's no way I'm going to be bearish here. It's consolidation starting. It might be the top. We're going to need a lot of confirmation for this to happen. I don't think that's the case. And I'm not worried if that's the case. But what I do want is more information. I want to allow the charts to develop. This was the first bow shot, right? Shot across the bow. That's it. That's all it was. Now we're going to find out. There's a lot of opportunity. There's a lot of opportunities still going to be available. The idea of this video is to really understand, guys, that you got to start thinking differently. And I'm not talking to anybody in particular. I'm talking to my audience. Because the idea for my audience is that I'm building great traders. And in order to be a great trader, you have to start thinking like a great trader thinks. So listen, it's been a hell of a run. We had a great run. December to remember. It's not over. There's a lot of time left in December. It might be a December to remember that we ended up seeing a big bearish move. I don't think that's going to happen. Here's what we're going to do right now. So I'm just going to quickly run through, and I don't have any charts prepared, but I'm going to quickly run through SPX. So listen, we had the bearish bat formation, and it's really not validated pattern in my opinion, but we did get a reaction today. And the reason for that is the fib levels just don't add up. Okay, they don't add up. And now we popped up over the 127. Like if you look at this, we went to 133 before we dumped down. But, it could be that. As of right now, the way I was looking at this today, I was thinking, right, that's concerning, right? That was the first sign of concerning volume that we saw. So that to me said something. I started thinking, the market, sometimes you draw a pattern in the market. These are all manually drawn patterns. We got to use our eyes to find these patterns in the market. And what we're looking for is to see a market reaction. So sometimes we'll look at a pattern and we'll say, oh, market didn't care. And we were looking at that pattern from this perspective, right? I was looking at it from this perspective. And then we popped up, we came back, we popped up. And now is it an overthrow? Or did the market react to it more from this range, right? Was it this instead? And that could have been the case today. And we saw the rejection at the top and a big bearish reaction to the downside. It could have been that right now. So now we start thinking about where's the key levels in the market. 367 was our previous all-time high, right? This wick in here, this was our previous all-time high. Did we see any reaction to this level? So let's look at this right now. And I'm going to grab this. I'm going to look at those real bodies in there, those two wicks. And that's the range right now. That's where we are. And if you notice, that's where we wicked from right now. It is a 4-hour bear flag. As of right now, there's a 4-hour bear flag. We did have a lower wick, but we are seeing some 2 upper wicks in here. In my opinion, if we trade in this range, we're going to have opportunity to go straight back up. Because they need to lose this range. This is the first key level of the market. And technically, we haven't closed under this level here as well. This is where we got bought up from the original push down. Actually, we're going to go all the way down into this zone. So if we lose this zone tonight in the overnight market, we're going to start thinking a little bit more downside. I'm going to run a pivot. And if you're ever trying to figure out, hey, where should I run my pivots from? Because I know people are really struggling where to run the fibs from. Just turn on your Heiken and Ashi candlesticks and it'll show you the different pivots in the chart very easily. So I'm going to run it from here. This is a clear pivot in the market that we saw run up. If we go to the 8-hour chart, that's the zone. That's where the higher low came before our melt up to the top. So if I run a fib from this extension level, this is what I'm going to be watching right in here. If we lose that zone, golden pocket, 36.37, 36.41, which is also going to line up with all of these real bodies in here. So if we look at that right in there, okay, all that zone, this is going to be the key zone to hold. I am anticipating the market is going to hold this zone. What caused today seems to me to just be technical. There's no fear in the market. There's no bearish news headline that dropped the market. It just looks technical. It looks like 8 green days for the NAS, straight going up. SPX had a bearish, a rising bearish wedge here. It broke down. We're looking at the zone. That's what I'm thinking. This is where I'm looking for. And ideally, if we do come into the zone, it's going to be a buying opportunity. There's going to be some great opportunities in the market. So looking at this, looking at NAS really quickly here. So NAS, boom, big candlestick. Listen, we ran up pretty hard. We didn't see anything like this on the August all-time high run. Okay, we didn't see anything like this. The difference that I saw today in terms of why I was like more cautious and actually got stopped out of everything was the sustained volume we were seeing. It was sustained exit volume versus, you know, this one candlestick in here, which is included with the lower wick. We were seeing sustained selling pressure coming in. And now here we are. We got an hourly bear flag here. We got a 4-hour bear flag in here. We lost this golden pocket. So we're looking at this from a different perspective now. So we were looking to see if that golden pocket was going to hold. We didn't, and that was from our last pivot in here. So we're looking down in here now, and that's where we came right now. So that's a key level we're going to be watching right now. We do have a 4-hour bear flag that's going to shape up when the bounce comes. This should be green by the morning. In my opinion, it should be green because look how far extended we got from the 8 exponential. The run up, 8 exponential was the money. Now, what we're going to watch to see if the 8 exponential is going to be the resistance. Okay, that's going to be the key for us to respect and understand. We should see a bounce. We should potentially be green by the morning. This pops back up, and then we're going to see what kind of reaction we have. Our support on the way up, is it now going to become resistance? I'm going to talk about 2 stocks because it's the main 2 names that I was playing that ended up ending those trades today. And okay, Apple's not working. What just happened here? Trading view just freeze on me or what? What's going on here? Let's bring up the list. Apple. Okay, here we go. So listen, whenever you have a thesis, you have a trade thesis, you have a plan that you're looking to play, and everything's looking great, and you have no sell signals. This entire time, I've been saying like everything looks good. Like we're going up. We got the news. We got the analyst upgrade today. Wedbush came out and said 160, raised target from 150 to 160. Hey, how about who was it? JP Morgan Chase that raised Tesla's target from 80 to 90. That was hilarious. Everything was looking good. Everything was looking good. Actually, let's do a little trade review in here. So we got in. I can't remember which candlestick we've been in. We've been in this trade forever. The options went up 125%. I think I ended up getting stopped out at about 77%, somewhere in that range. It's 50% give back. You think I want to give back 50%? Hell no. But that's the nature of the beast, right? That's the nature of the beast. At some point, you got to get protective when you start seeing some red flags. The reason why I didn't get out early was because I'm just looking for healthy consolidation. And I'm going to show you why. First off, we rejected the golden pocket in here. This is a golden pocket rejection. We mint to a new high, and then we started to sell pressure. Now, what caused the sell pressure? Was it the NAS pushing down, or was it Apple helping push down the NAS? It was the NAS. The whole board went red. That did not help Apple. And you cannot sell the top. I mean, you could sell the top and say you sold the top, but then you're never going to catch the trend. You're always going to miss the larger moves. You cannot sell the top if you're not looking for the top. I was not looking for the top. I was looking for a continuation of this trend to the upside. And ultimately, I believe there's going to be some more upside, and we're going to wait and see how the price action develops. Now, likely an inside bar tomorrow. If we see some more sell pressure, then we're going to be looking down in here, and we'd be looking for a golden pocket retracement from our bottom. That's what we would be doing right now, right? Coming off of that zone, we'd be looking for a golden pocket retracement, bring us down somewhere into this range, potentially right back to that upper trend line, see a reversal candlestick. We lost the 8 exponential here today. Let's zoom in. Let's go check out what happened on this chart earlier today and why I was feeling really good. The initial reaction this morning, and let me turn on the extended hours. The initial reaction this morning when the bell rang was bearish. Okay, that's okay. I'm like, for me, this is like no sell. Like, this is going to be a buy because I believe the trend's going up. So we got into the golden pocket early. We're seeing some pressure, and now look at this move here. Now, if I look at this volume. If I look at this volume candlestick, and let me turn it on with extended hours, right? Extended hours, sorry, this non-extended hours, look at that volume, or extended hours on, look at that volume. Okay. This volume, this bull volume here coming in, even these candlesticks in here, is greater than any previous day on this move. Greater than any previous day on this move. Just verifying that. Yep. So I'm seeing the big volume coming in. We got the 160, not 150, 160, $10 price target increase. It's funny because I was telling Sherv yesterday, the watch is $10 price guaranteed. The headphones are $10 price guaranteed. Guaranteed. And that's what happened the next day. So dip buy, boom, straight V shape, big volume. We break the golden pocket. What's your initial reaction? We're going to have a big bull day. This is the day we've been waiting for. It's the breakout day. I'm not looking to sell the top. I'm looking to let the trade mature. This is the nature of the beast. This is it. So what happens is we see a sell candle. Look at the volume on that sell candle. It's not that concerning to me yet. Okay, it's okay. It's not like nothing volume. It's not that concerning to me yet. Let's watch what happens at the 8 exponential. We lose it. Okay. The volume's still not too concerning to me. We come up, lower high, higher low, higher high. We're going to go straight back up. We're going to break the golden pocket. The market dumped. And that's what happens. And that's how the trade ends. And you're looking at it. You make a new low. Everything's starting to look a little bit bearish here. The market's dumping. The whole board is dumping. And like, what are you going to do? You just want to hold because, you know, you want to have a 200%, 300%, 400%, 500% option win, whatever it is, right? That's the nature of the beast. I sold some shares along the way throughout this journey. So overall, this is a big trade. This is a big trade that broke my account into a new all-time highs along with Tesla. So I'm very happy with the trade. Ultimately, the way the trade ended, the current trade ended, yeah, it broke. It was a breakout, fake out. We broke out over the golden pocket. We made a new high. Where was the daily high here? And the reason why I'm like reflecting on it this way, guys, is broke out to a new high, is you can't do nothing about that. You just can't do nothing about it. It's the trader's journey. There's going to be these days. You know, somebody went in, sized up huge on that break, sized up huge, and I don't blame them. I don't know who the person is. I'm not saying it, but somebody did. Of course, the volume was coming. Everything was looking good. We had no resistance until all-time highs once we broke that level. That's it. We're gone. Sucks. Guess what? It's okay. There's more trades coming. And Apple's likely going to set up another trade. What I need? More price information. I need more price action. I need to see what tomorrow looks like. I need to know that everything's okay. And yes, it's being bought up. I don't care that I didn't buy the bottom because I don't care that I didn't sell the top. We'll quickly check out Tesla and then we'll wrap it up. And I'll see you guys all in morning live tomorrow. Hey, don't forget to give a thumbs up to the video, share a comment, let me know. Did you respect your high or low in your account? Tesla. So listen, we had yesterday's news about the equity being sold, 5 billion. Last time we saw that was September 1st, and we had a bearish reaction on the first day, and we sold off for 4 or 5 days. Yesterday we saw that, and the bulls came in and bought the dip. We know there's a demand for the stock. We know we got uplisting. We know we're going to continue to see demand. Tesla is going to be a monster trade again. There's going to be another monster trade, but you don't need to be buying it today. Today was a bearish engulfing candlestick on volume. Whatever demand that there is still for the stock could not outweigh the pressure that we saw in the market. What happened today, how much does it have to do with Tesla? How much does it have to do with the market? Right? The market is what pushed Tesla down. It wasn't Tesla. Tesla was due for consolidation day. Names that were due for consolidation day had bigger consolidation days than names that didn't need a consolidation day. Not everybody got crushed today. But overall, you look at this chart and you say, guys, we were trading at 600. 2 weeks ago, we were trading at 400. We had a hell of a run. And it's not over. It's a pause. We're looking for the re-entry now. We're looking to see where the trade is. The moment you get stopped out of a trade, don't look that you need to get right back into it. The moment you have a big trade, don't look immediately that you need to get into another big trade. Take a breather. Relax. Chill out. Enjoy those moments. Don't worry about the give back. Think about the journey, and the journey will lead us higher eventually. Big bear volume, bearish engulfing candlestick. We're looking for the follow through day 2, and then we're going to be looking to buy the dip. Where's the dip going to be bought? Well, we're going to look for a couple things. One, we're going to run a fib from this zone. So we're going to understand our fib level from here. Okay, golden pocket's going to be right there. And if we lose this, then we're going to look for a fib level down in here, and we're going to use the 0.382. Let's bring up the 0.382 in here, and we're going to understand where those two zones are and where our daily support is. So if we look at this on the 4-hour chart, we're going to look at that support we have in here. It's going to line up to 0.32. If we lose this zone, that's the zone I'm going to be looking to see what the buying pattern or selling pattern looks like when we get in the zone. Plus, we need more information on the market. Is the market okay? Is the market dip being bought? It's just a one-day sell-off, and now we're getting back to regular price action. Great. We will see an opportunity here for a play. If the market's going to be fearful and we are going to go for a multi-day consolidation and our top is in for now, we potentially could be buying back down in here. I don't think that's going to happen. We have, how many trading days? 6, 7, 8 trading days until the uplisting. We know at some point those algos are going to trigger on and the stock's going to be bought up again. And guess what? If you protected your higher low from 100 to 90, you're going to be ready to buy right back in with the algos. If you didn't, 100 to 40, you're going to be hesitant, you're going to be fearful, and you're going to regret the opportunity cost on the loss. So I'm excited. There's going to be opportunity. Let's watch some price action develop. Guys and gals, change your mindset. Understand, when you play with the trend, the consolidation day comes, and that's where the higher low is in your account. Respect it. Peace out, everybody.